Well, Doug, American investors are facing another day of reckoning. Stock prices already have fallen today on the overseas markets. We have two different viewpoints this morning on where the New York market goes from here. Joining us are Monty Gordon, analyst for Dreyfus & Company. Mr. Gordon calls himself a concerned bull. And Frank Korth, market technician for Shearson Lehman Brothers, who's among the Wall Street bears. Good morning to both of you.
Good morning.
Monty, it's very easy to understand the concerned portion of that. Where's the bull coming from?
The bull comes in the sense that the economy is still on the strong side. You've seen these stocks come down now to levels that would have been considered quite attractive some time ago. And I think that this was something that was coming on for some time. In fact, the interesting point about it is that there's nothing new in terms of what's out there. We know that there's been a budget deficit problem, a trade deficit problem, a sense of instability as far as the dollar is concerned. I think the market's been ripe for a correction. I think you got it. I think it is, excuse me, has created enormous emotional overtones, and that's what we're looking at. The foreign markets being down are in response to what happened here. They're not necessarily leading the package. I'm certainly not going to say that the market is going to rebound and recapture it all, but it seems to me that you're still basically in a framework that would encourage you to think that the market could, over a longer period of time, start to show some recovery as far as this pattern is concerned.
Frank, you've been bearish on this market since August. Do you think that Friday was actually the start of the real bear market?
Well, I think in terms of looking at what's been taking place since August, what we saw this past week was a capitulation to the downtrend. But what turned us bearish in August on the market was a capitulation to the uptrend. This one is coming a little bit different. We've had a 1,000-point advance going into August. We've only had less than half of that decline so far. So I think the pain is going to last a while longer. I think it's too early to start becoming optimistic. The selling here is getting into a climactic stage in terms of volume, but we're going to have to continue that, I think, certainly past the refunding that occurs in early November, because it's the interest rate problem that brought us down. And what we've seen in the last year and a half is as we go into these major refundings, interest rates always have more difficulty.
And would you put the blame squarely on interest rates? Do you think that's where the fault lies?
In terms of the decline that has occurred so far, I think there's plenty of blame to go around to all parties in terms of maybe people being too euphoric about the positives. I think there's problems in interest rates, there's problems in the international scene. So there are a number of areas that we could lay the blame on in terms of what started the decline.
It's not the interest rate per se. It's the perception of what the interest rate rise could mean in terms of the economy, in terms of the dangers that would be proposed in that particular venture. What you're looking at is that enormous pressure now is going to be placed on the Federal Reserve. If Alan Greenspan thought he was coming in as chairman, he was going to have a honeymoon. They just suddenly closed off that honeymoon, and he is confronted with a very serious and major problem. And a lot will depend on how the Federal Reserve conducts itself during this period of time. What you're looking at is we have to have some restoration of reasonable confidence of stability. If we don't get a perception of stability, then the market will continue to be difficult.
Do you think that we've hit the bottom? Do you think we have a ways to go? And if we do, where's the bottom?
I don't think you've hit the bottom in the sense that you're going to hit that and you're going to bounce off it. I think what you've done is you've gone a long way toward the bottom. I certainly agree with Frank, you've got more to go in that regard, but I think much of it now is the spent force of what has happened, and I think you're not looking at thrust, you're rather looking at momentum. I think you could go down a little bit further, obviously.
Bit.
Well, I would have to take you down somewhere around 2,100, 2,200 as far as the Dow is concerned. But that's not a serious problem, because you're looking basically at individual stocks and how they're going to respond. I think you're nearing bottom on those in a fairly short period of time.
I have just a few seconds left. I need a quick answer from both of you on this. What advice, from your particular point of view, do you have for the small investor who's calling up their broker today? Frank?
In looking at your stock portfolio, I think what you do is you sell those stocks that you've been hoping that would come back, and use that as the cash cushion in your portfolio.
Monty?
I think if you've been buying good stocks, you stay there and you hold on.
Monty Gordon, Frank Korth, thank you both for sharing your point of view with us today.
Thank you.
Doug?
Thank you, Faith. And now the